welcome to this week's edition of Grand Slam with Bats. I am Tanya Smitherman, and with
I
me,
am Manisha Munikar.
and this week we're going to be talking about the market data numbers and going over, what happened in the month of February. So, Manisha, let's go through that with the audience.
Sounds great. Sounds great. We're always so excited to do these videos, right?
Yes.
So, we did do January housing market, what the housing was like in January last month. Now, this month we'll do the February housing data, and it looks like the prices are still rising in Birmingham. It's still going at that full force. So
Yes,
so
it
I'm going
is.
to talk about sales first. So according to our MLS, February home sales in Birmingham increased 11.1% year over year.
Wow.
Yeah. Which last year this time was 1126, and this year 1251 closed transactions. Which again we said last week was the 8th consecutive month. Now it is taking us to the 9th consecutive.
Wow. That's awesome.
Isn't that crazy?
Yeah.
And then sales are now up 16.3% year to year.
Wow.
Um, well, year to date.
Yeah.
And following seasonal trends, like we talked about last month, 5.1% from January.
Wow.
And let's go into inventory, Tanya.
All right. So inventory. So that's amazing about the sales prices going up like that and continually going up. So like the momentum is still going. And so with the sales prices going up, part of the reason is because of the inventory or lack of inventory that we have. So homes listed for sale decreased by 29.1% year over year from 1 year ago. So in February last year, the listings was right about 4,290. And this year, this February, it was 3,042. I mean, like, that is insane. And months of supply, so inventory to sales ratio decreased as well. So where we had 3.8 months of supply for the consumer to buy, now we only have for the month of February 2.4 months. I mean, 2.4 months, that's it. And that is just like unheard of. So this is reflecting a market where sellers generally, right, have elevated bargaining power. So what does that mean? That means that the sellers can not they can choose what they will and will not take because there are a lot of buyers biting at their listings because the inventory is so low. So it's still definitely a seller's market for sure. So because it's a seller's market, Manisha, tell them about pricing. How does that impact the pricing of a home?
Well, the pricing, it's just gonna keep going up.
Yeah.
Right now, the median sales price in February was 249, 900,000, which was again an increase of 12.1% from 1 year ago, and the increase of 6.3% from January.
Wow.
So just from that, we know that the prices are still going up. It's still taking heat. It's just
Yeah,
going
and you
up,
said
right?
from January, 6%. I
Right.
mean, normally in normal circumstances in past years, you may have an increase of 5% for the year,
Right.
the year, but this is 6% for a month.
For a month.
Yeah,
Yeah,
that's
yeah, exactly. And even days on market, we love talking about days on market. Even days on market, homes sold in February averaged 28 days on the market, which is
wow.
14 days faster than February of 2020. So that has stayed about the same as last month as well. And
Now, less than a month. That's
less,
it.
yeah,
Wow.
crazy, less than a month. Yeah. So Tanya, you want to talk about forecast?
Sure, yes. So February sales were 127 units, or right at 9.2% below what the Alabama Real Estate Center, their monthly forecast was. So ACRE projected that the sales would be right around 1,378 for the month of February, but the actual sales was 1,251 units. So ACRE's forecast a total of 2,567 sales year to date, which there were kind of close to that, but it was a little short of the forecast. It was actually 2,441 actual sales through February. So that was a difference of 4.9%. So even though the market is strong, it's a seller's market, but the analysts thought that it was going to be a little bit stronger than what it was, and the forecast was off about 5%. But it's still, I mean, if you look at it, 2,441 actual sales year today, that's still a lot of homes that's been sold just this year. That's in 2 months. So that's
Right.
awesome. And so of those homes that was sold, we talked last month about new construction. So Manisha, how many of those homes that were sold in February were those new construction homes?
So new construction, I think it looks like it went up just a little bit from last month. This month, for the month of February, the new construction homes that were sold was 204, which is about 16% of all residential sales.
I mean, that's still good.
Yeah, but we know that, there's not many houses being built for so many reasons, like we talked about in last month's video as well. So now the total sales did increase by 29.1% year by year. And the median sales price in February was 297,844. Which is
Wow.
an increase, right? Which is an increase of 2% from January and a decrease of 13% from a year ago.
Wow. So we just talked about the resale median price is 249.9, and the new construction price is 297.
Yeah,
So
and look at that gap.
$50,000 gap between new construction and resale.
Right.
So wow. So if you're looking to buy, this market right now is just very different, right? Because if you're looking to buy, the number of resale homes, it's minimum, it's a lot less. But if you go into new construction, then you're paying a lot more.
Right.
So it's like you have to really make sure that you understand this market if you are a buyer. And that's why it's really important that you work with a real estate professional to explain the ins and outs of the market. So you can get the best bang for your buck.
Right. Absolutely. Seller, buyer, or even real estate investors, if you're not into real estate, and if you're planning to get into real estate in any form or shape, this is definitely the time to talk to a real estate expert. And
Most definitely.
Right.
Most definitely.
Yeah.
So what would you say the trends? So let's talk about the trends that's powering Alabama's economics right now.
Right.
Our economic recovery and growth in 2021. It's always great to look at the numbers, but what's driving, the economy? That's important to understand, especially if you're going to be purchasing a home, selling a home, or investing in real estate in Alabama.
Absolutely.
So last month, we talked about how the experts were optimistic about the housing market and overall growth and stability in the economy. So to continue on with that, today we will focus on Alabama as a whole and see what are the trends that are powering the stable economic recovery and growth, for 2021. So there's an article in Made in Alabama, and we will put that information in the chat below. But Made in Alabama, they said, fortunately for Alabama, the economic foundation built over the past several years looks resilient. So that's good. That means that we are resilient regardless of what's coming our way right now. Plus, the economic development pipeline for 2021 continues to flow with high caliber projects that are posed to bring new jobs and investments to Alabama. So we talked about a while back about like the car industry, but we also have the technology industry. We have the medical industry. We have a lot of different industries that are planting roots here in Alabama that's really impacting our economic growth. So right now, there are many exciting developments unfolding across Alabama that showcase next level innovation. And that's great because you want to be with the trends, right? And go surpass what's trending. Highlight the extraordinary capabilities of our workers and contribute more horsepower to the state's evolving economy. And this was quoted by Greg Canfield, who is the Secretary of Alabama Department of Commerce. So it's not just Manisha and myself saying this. The experts are saying this as well.
Right. So we're just bringing to you what the experts are saying so that we can put all of these together.
Exactly. Right. And while there's still many obstacles to overcome and healing to be done, specifically with things happening with the coronavirus, sparks of vitality and lighting up in many sectors of Alabama's economy. That is something also Mr. Canfield stated. So even though we're going through recovery from, last year was that hit us all, not just Alabama, but everybody, the whole country. But there are recoveries happening from the coronavirus pandemic. So we're going to talk about 5 major trends that are reviving Alabama. So Manisha, what's the first one?
So the first one is hiring wave, right? So, Ed Castilla, Deputy Secretary of Alabama Department of Commerce and Director of AIDT, is saying that no one is plugged into the state's hiring outlook quite like Alabama, right? He's saying that Commerce and AIDT specifically are busy as they have been as a program assisting companies with hiring workers for new and expanding jobs. So, wow. He said that in AIDT's 50-year history, the level of activity is record setting.
Wow.
Which is a good news, because now at this point we know that the higher home price is not only because of low inventory. There's also some stuff going on in the city and Alabama itself that is really helping us lift the economy up. So that's a really good thing, hiring wave. We want to keep that going, right? We don't want to stop.
Definitely. Yeah. Low, and with the hiring wave, that impacts unemployment. So the more people are hiring, our unemployment number goes down, which is great because it helps families, it helps households, And it also helps the economy because people are pumping money into the economy because they have money to do so.
Right, right. And one good thing about Alabama is, unemployment in Alabama is lower than the national.
Yeah.
The national level, which is good news for us, and which just tells us that there is something going on in Alabama.
Yeah, definitely.
Yeah,
Definitely. That's
yeah.
awesome.
Right. So what about
So
the trend number 2?
yeah, so trend number 2 is the auto growth. So we know Alabama is like the auto capital of the world now. We have everybody here.
Right,
So
right.
Alabama's auto industry remains a dynamic growth engine for the state's economy, overcoming challenges posed by the pandemic, of course. Alabama's automakers were able to resume production after adopting new safety measures, setting the stage for hiring to begin again in this vital industry sector. So, yes, everybody was impacted by the pandemic, but the automakers here in Alabama, they worked diligently to come up with contingency plans on how to get their production back started, how to get the workers back to work. So in fact, Alabama's auto sector is posed to add more than 6,000 jobs in the coming months, according to Commerce's projections. So that's huge, 6,000 jobs in the coming month, all due to the Alabama auto sector. So the 2021 production launch at Mazda Toyota Manufacturing in Huntsville represents an important milestone in the history of Alabama's auto industry. Again, that's another heavy hitter. So we have Mercedes, we have Hyundai, we have Honda, we have Mazda. But this is hardly the only development that is adding spark to the sector's growth trajectory in 2021. So Hyundai is adding 200 jobs, 200 at its Montgomery facility, aiming a major investment to produce 2 new models to its Alabama's production line. So these new models are going to be the Santa Cruz crossover and the SUV. So that's for Hyundai, that's 200 jobs right there. And then Mercedes-Benz, they're also ramping up to build 2 new electric vehicles at its Tuscaloosa County plant, which is generating activity among suppliers ahead of the 2022 production launch. So that is huge too, because we think of it just as those individual plants, but there are subsidiaries to those plants that are impacting the growth as well, because they have to get their parts from places as well. So Mercedes-Benz, meanwhile, is ramping up, is also involved in a venture to open a 54 million parts facility in Vance, and that will create over 373 jobs. So as you can see, the automotive industry really impacts Alabama's economy. And a lot of those workers that are at these places, they're going to want to what? Buy a home.
Right, right.
So as you can see, it really impacts the overall economy, not just the housing market, but everything.
Right.
So that one is a huge trend in itself.
Right.
So trend number 3 is talking about distribution. So Manisha, tell us a little bit about that.
Yeah. So, before going into distribution, I was gonna say that, I'm a big fan of Casey Conway, right? He used to be our chief economist for ACRE. So he's not with them anymore, but anyway, he talks about, in terms of transportation, he talks about Port of Mobile and Airbus, and how it's going to impact Alabama in months and years to come. And the way he talks about it, it's very promising for
Yeah.
us Alabamians. So we're excited about that as well. And so distribution mode is, they're just talking about how Alabama's growth and distribution is in it's not only the parts that we talk about, but it's also in the distribution and logistics sector, with lots of good projects going on in Bessemer, Birmingham, but also across the whole state.
Right.
And now, altogether, these projects involved about 500 million in new capital investments and the
Wow.
creation of at least 1,700 jobs in the state.
Wow.
And this is according to our commerce estimates.
Wow.
So that's pretty cool. Not
Yeah.
only, yeah, that's one more area where we're going to see growth in distribution.
Yeah, definitely.
So pretty excited about that. What's the other one? Trend number 4.
Tech acceleration. So I was talking about technology earlier when we started, and that's the number 4 trend is technology. So recruiting like high-tech jobs has long been a priority of Alabama because we, in days past, we were known for like our steel industry, right? Like years ago, steel, it was about the steel and it was about natural resources, things like that. We were not like the tech capital of the world, or not really even the automobile capital, because that's just over the last decade or so. But technology, I mean, in things like Innovation Depot, I mean, it's just so much going on in Alabama that people don't even realize from a technology standpoint. Shipped, Ship is here as well. That's their headquarters. And they were saying, Secretary Cranfield was saying that we expect to see a new wave of growth from technology focused companies that are increasingly viewing Alabama as an attractive place for investment. And that too is because it has to do with, again, real estate. They can come here and spend less, right, for the real estate, and also from a business tax standpoint as well. So it's a lot of advantages for them to invest in Alabama. So again, what were you gonna say?
I was gonna say, and especially at this time going forward, working from home has become a new norm. So you don't have to be in the tech hub to work in the tech area. So that's in with, like we talked about in our last video, right? With combine that with the low cost of living and great place to live in. I mean, that's just
a win-win. It's
right,
definitely a win-win. Yeah.
right.
And they were also talking about established programs as well makes it attractive, like Alabama Launchpad Initiative and Alabama Innovation Fund. So they continue to play a vital role in the efforts for the tech trend. So we said that it was 5, so we've gone over 4. So what's the 5th trend, Manisha?
So 5th trend is the rural attractiveness. So now the growth potential of Alabama's rural areas were reflected in several impressive projects launched in 2020, with investment announced in a range of industries across the state. And that's one good thing about Alabama, with all the tax incentives that the businesses get for coming and starting business here. And in the rural area, that would be a good location for these big companies to come in. So that we have been seeing that a lot lately, especially in 2020, and we're pretty excited about that. Now, one of the ones that they're talking about is the new auto supply chain project, which will bring more than 45 million in new investment and over 285 jobs to, cities like Selma, Alexander City, and Greenville as well.
And
So,
that's huge because those are smaller cities.
right,
So the impact that that will make on those cities economically is going to be huge because they generally don't have a lot of activity when you compare it to like a Birmingham. That's a
right,
major
right.
city, or a Mobile.
Mhm.
So them pumping those initiatives in those cities, that's going to really impact the growth of those cities and everything that's surrounding those areas as well.
Right, right. And
Yeah.
that will also, help decentralize
All
and
right.
make the infrastructure of these places better as well as those big cities like Birmingham and Huntsville. And
Yeah.
so yeah, great, great, great. So now these were the five trends. So we're very optimistic for Alabama in
Yes.
terms of jobs, in terms of the overall economic health and
Yes.
housing market,
Yes.
right? And housing
Definitely.
market. And it does make us feel better because, the price hike that we see, it's not only from the shortage, but also there is economic growth going on in
Right.
Birmingham and Alabama as a whole,
As a whole,
which is a good
which is
thing.
awesome. Yes.
Right, right. So the next thing, Tanya, that I want to talk about, and we talked about this in our meetup last time, and Deanna with auction.com was there talking about foreclosures, right?
Yes.
And then she mentioned that there were 1.1 million properties in backlog to be foreclosed once the moratorium lifts,
Wow.
right?
Wow.
So, right, exactly.
1.1 million.
Yeah,
Wow.
right. And
Wow.
then, we were talking about
Wow.
right. Wait till you hear the other data as well. And so we were talking about, how does that compare to the housing bubble of 2007, 2008? Is it going to be about the same or what? Right. So now I want to put that 1.1 million properties that's in a backlog in perspective and in context and see where we are compared to the other years that's has seen foreclosures. So now foreclosure market report by atom.com, which shows that foreclosure filings, and when they say foreclosure filings, it means default notices, scheduled auctions, and bank repossessions, that
Mm-hmm.
there were 493 properties reported in 2019,
Okay.
okay, which was 21% less than 2018.
Well, that's
So,
positive.
right, so that kind of gives us perspective of, where 1.1 million is, right?
Right.
And okay, so in 2007, 2008, or 2009, when there was a housing crash, there were 2.9 million foreclosed
Mm.
properties.
Okay. Okay.
So,
So we're
we're
significantly less
not
than that.
right, but now we do
But we
have,
still have, I mean, 1.1 million is still a lot of
right,
foreclosures,
right.
but we're
Now,
significantly less.
right. And that is, and then we have to keep in mind that those are only backlogged properties that
Right.
are non-government, that are vacant, and that's abandoned.
Yeah.
There have been foreclosures going on, right? So we
Right.
need to take that into account as well. So when we
Mm-hmm.
take that into account, there is more than
Then 1.1
right,
million.
right.
Yeah.
So, and then So I wanted to kind of quickly talk about, is this going to be another bubble? What are the experts saying if this is going to be another bubble? And this is a really good article from Bloomberg Business Week, and this article is written by Peter Coy.
Okay.
And what he's saying is, okay, so now, number one, let's talk about the first point. In 2007, 2008, at the peak, homeowner vacancy rate was around 3%.
Okay.
Okay, now, and this is when there was like bubble in the market, and started to get into the crash market. Now, this is when the builders were putting up houses faster than there was actually need for it. Yeah, and then, it took a while, but because of this, the prices eventually plunged, right?
Right.
And people defaulted on their mortgage. It crashed the U.S. economy, and it also took down the global economy with it, right? But today's situation is different. That's what he said. He said that the homeowner vacancy rate today is 0.9%.
Oh, wow.
Compared to 3% that was then.
Right.
So
Right.
his thing is, there's, in other words, there's a shortage of houses this time, not excess.
Right. And that goes in line with what we just went over earlier about the numbers. We know that there's a shortage for sure of houses, like 29% less homes this year in February was available from last year. So that in itself is in line with what he's saying here about there being.
And that makes sense. So it makes us think that maybe it won't be maybe it won't be as bad as we think it's going to be, or the experts are saying that it's going to be.
Right.
What's the other point?
So the other point was from Lori Goodman, who is the director of Urban Initiatives Finance Policy Center. And she said that she didn't think that we were in a housing bubble right now. She was saying that home builders became extra cautious, right, after the last housing bubble, popped. And so home builders still are, even now, they're more cautious now still because of what happened in the past. So she was saying that we're actually producing less units than the rate of household formation each year. So they're kind of what I take from that, they're pacing themselves, right? They're not trying to just build. They're actually pacing themselves to make sure that we don't go back to the way it was.
Right.
When we did have the housing.
Right. Because absolutely.
So this is like the net increase in units after subtracting houses that are torn down or otherwise become uninhabitable. So it's good that the contractors are pacing themselves, and we already know that we're in a shortage. So that kind of helps. So it's unfortunate for the individuals that will be foreclosed on for sure. And we hate that, but those homes will be pumped back into the market to help with the shortage. That we have.
Right. Absolutely.
So what's the next fear or the comments that was made about the housing bubble?
Right. So, and Lori Goodman, the same lady, she is saying that now in 2007, 2008, right, underwriting was so bad that, they did not need income verification. They did not need job verification. They were giving out loans left and right.
Anybody could get a loan, regardless if you had the ability to pay for it.
Right. Yeah. So now it's different this time. The
Mm-hmm.
underwriters are and we feel it, right? We feel
Yeah.
it we feel it with clients. They're very, very strict.
Yeah.
And it just gotten more and more stricter.
Yeah.
And so it sounds like in some way it's a good sign.
Yes.
Right. And also, what the bubble theorists were saying, that the market could crash when all foreclosure protection, the moratorium expires, considering that there's 1 in 10 homeowners with a mortgage that's behind on payments.
Wow. One
Yeah,
in 10.
that's a lot.
Yeah, it
Um,
is.
and this was according to U.S. Department of Agriculture. Um,
Mm.
and she further said that there's no reason to expect a wave of foreclosure because most homeowners have accumulated substantial equity in their homes,
Equity. Right.
so they could sell them and pay off their mortgage in full with no sweat, or no sweat, right? And that's what we talked about in our last video.
Right.
They could take advantage of their equity and still be okay,
Yes,
right?
definitely. Because, and as you can see, all of this comes together. As we were talking about month over month, the increase in equity, the appreciation, the appreciation 6% from January to February. So if you're in trouble, definitely get with a real estate professional if you're a homeowner so you can know your options. Don't just walk away from your home.
Yeah.
You may still have time, specifically being that, the moratoriums have not expired, to put your house on the market, get it sold fast, get it paid off, maybe even walk away with some financial gain.
Right.
So you could start over again once your financial situation gets back on point.
Exactly.
Yeah.
Exactly. And that's what she's saying. This wasn't the same the last time around when the bubble happened. So this again tells us that it's not gonna be so bad.
Right.
Right. And she did say that she's feeling very optimistic about the health of US housing economy. And
Which is good.
for all the trend that we looked at, I mean, we're even more optimistic about
Yeah.
Alabama, right?
Yeah, because if you think about 9 consecutive months, I mean, that's a great trend. We're not just talking about a month or two. That's 9 consecutive months that
Right.
the housing numbers have been trending upward. So, if you look at past, the immediate past to predict what's going to happen next, then it's still going to be trending. Now, we don't know that 100%, but we're just going off of what we see happening over the last couple of months.
Right, right.
For sure.
Now, one thing that we need to be kind of looking out for is this big news about unionization of Amazon workers.
Yeah,
Which way, and voting is what, end of this month,
I think so.
and then which way it goes will determine a lot of things for us Alabamians as well. So
Right.
that's
Definitely.
definitely
Yeah, because it'll set a precedence. Because Alabama is a right to work state.
right.
So being a right to work, that does attract some companies, but it could impact it
Right, right.
in many ways. But I just
Right, right. So that's definitely something to look out for, for us and for economists as well. So that we need to keep a close eye on it as well.
definitely,
Yeah,
definitely.
yeah,
Well,
yeah.
this has been great, talking about the numbers, and hopefully you guys have gotten a lot of great information that you can take back and share with others. That's what it's all about, us all learning and collaborating together. Iron sharpens iron. And so that's why we love to bring these numbers each month to you guys and talk about what's impacting the economy here in Alabama, because it's very important that you understand, especially if you are a homeowner looking to invest or looking to buy. So it impacts everybody in this,
Right, exactly.
for sure,
Exactly.
for
Right.
sure.
Right. And then like we said, this is a very unique market. And if you are planning to buy, sell, or invest, this is the time to get an expert opinion. Definitely, definitely. Not the time to do it by yourself if you're not into real estate market. So
Not
yeah,
at all, not at all, not at all. And if
yeah,
you have questions, you can definitely reach out to us. You can go to our website, which is batsandassociates.com. You can ask questions, reach us via email, which is batsandassociates@gmail.com. And definitely we want you to like this YouTube video and subscribe to our Grand Slams with that YouTube channel to get update information each week. We talk about something different. We bring the numbers once a month. We interview experts in the field of real estate. We actually go and interview local entrepreneurs, nonprofit organizations. And, we actually teach something as well. So Grand Slams with Bat is all about sharing information, getting the information out, and engaging with the audience. So if there's a topic that you want us to discuss, teach on, or a special guest that you would like for us to have on, reach out to us, let us know, shoot us an email. And also you can send us a message on Facebook. We are on Facebook, facebook.com, Batson Associates, and we are also on Instagram as well.
right, right. And
So
also, we do have on our website, batsandassociates.com, we do have classes
yeah,
that, that might interest you. We do have some free classes. Go in and look what all free classes will benefit you. It's all has to do with, your personal development, professional development, real estate, and whatnot. So definitely go to our website, visit our website, look at all those classes and see if any of those work for you. Free and paid, right?
that's it. That's it. That's
Yeah.
it. Well, we hope you guys have a great rest of the day and have enjoyed this edition of Grand Slams with Bat. We look to see you on next week. Bye.